Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bullish scenario where this is the low and we're looking for a wave 1 or A to the upside, a finished or soon to be finished wave 2 or B for then continuation to the upside in either a wave C or a wave 3. The fact that price retraced to the 0.886 however, taken from the low to the high of 1 or A, gives higher probabilities for this to be a wave B than a wave 2 because the 886 Fibonacci retracement is a common target for wave B and a rare target for a wave 2. So if we then do get a potential move to the upside, which should be an impulse, the probabilities are higher for this to be a wave C and then an ABC scenario. If we zoom in to this structure over here, we have to look for a 3-wave move to the downside and then a 2 or a wave B, which then has to be a zigzag to the downside due to the impulsivity that we got. So in this particular scenario, we are then looking for a zigzag 5-3-5-wave structure where you can count a nice 5-wave move in A, a 3-wave complex structure in a wave B, a WXY, retracing to the 0.382, which is a common target for a wave B, for then a 5-wave move to the downside in wave C. Now the most common target for a wave C is between the 1 and the 1.236, taken from the high to the low of A to the high of wave B, but as you can see, price retraced to the 1.618, which is a rare target for a wave C but a common target for a wave 3, meaning that once the 1.618 is tagged, the probabilities that this is a wave 3 to the downside increases compared to this being a wave C to the downside. Now, if we at least look at the potential opportunity of this being a wave C to the downside, we have to count a 5-wave structure to the downside because wave C is an impulsive move. So if we then zoom into this structure over here, then this is what I'm then looking at. So if we go to the 2-hour, we have to count 5 waves. Now we can count a wave 1 in a diagonal, we can count a wave 2 in a zigzag retracing to the 0.5. That is very nice. But then after this wave 2, we basically had a straight line to the downside where also volume has been increasing. Now because of the low at the moment having the highest amount of volume, it is unlikely that this is the end of an impulsive structure, because in an impulsive structure it is by far most common that you have a wave 3, then a range in a wave 4, then a wave 5, and then the wave 5 is made on lower volume. But as you can see, so far price has only increased in volume when making new lows, which is not really what you want to see. So that is why in this scenario, still looking for a wave 5 to the downside, where this could potentially be the low of then a wave 3, then you'd be looking for a 4 and eventually a wave 5 to the downside. Most common target area for a wave 4, taken with the Fibonacci from the high of 2 to the current low that we have on the chart, is between the 382 and the 0.5. If candles are closing above the 0.5, that would invalidate a potential wave 4. And as you can see over here with this retracement, the 0.382 has been tagged, but for a wave 4, you do expect a little bit of a longer range because this wave 2 was very short in time, and because of the rule of alternation, if wave 2 is short and simple, wave 4 tends to be long and complex, so we can expect a bit of a range maybe throughout the weekend before then a wave 5 to the downside. Now if we then look for the targets of a wave 5, that is when we get a little bit of an issue, because you see the invalidation level, which is the low over here, because of course if we are looking for this to be a wave 1 or A and then eventually a retracement before another continuation in a C or a wave 3, then price is not allowed to go below this low. So we have a very clear invalidation. And if we then look at the different targets of a wave 5, the most common target for a wave 5 is between the 1.236 and the 1.618, taken with the Fibonacci from the low of 3 to the current low or the current high over here of wave 4 that tagged the 382. Now this is the most common target, but as you can see, it's basically below the invalidation level. So that doesn't really work, right? Then you have another way to estimate the low of a wave 5, which is the 0.618, taken from the high of 1 to the low of 3 to the current high that we have at the moment for a wave 4, which is also sitting below the invalidation. Now, if we get a higher high of a wave 4, right, if price moves to the upside, let's say to the 0.5, then still the 0.618 is below the invalidation, and we don't really want to see candles going above or closing above the 0.5. So the 0.618 doesn't really work. And then finally, you have the 1-to-1, which is taken from the high of wave 1 to the low of wave 1, and then you put it on the high of wave 4, and I put it currently on this high over here. And you can see that the 1-to-1 is very nicely indeed above the invalidation. Great. The problem is it is not below the low of wave 3. And a truncated fifth wave, meaning that wave 5 is not going below wave 3, is extremely rare. It's something you do not see very often. So the fact that the 1-to-1 is above the low of wave 3, is very, very uncommon and very rare, and also not really a target. So basically, the play room that we have for a wave 5 is below the 3 to the invalidation, and you can see how small this space is for the bullish scenario, lowering the probabilities for this bullish scenario. If we then go to the bearish scenario, we're looking for a three-wave structure. In a wave, a three-wave structure. Wave B is an expanding flat over here to finish wave B, for then a wave C to the downside in a 3-3-5 expanding flat, where wave C is an impulse to the downside, which is not yet finished, as you are then looking for a bigger 5-wave move. The most common target is between the two 1.618s, which is between 23.4k and 22k. Now we're then looking for a bigger impulse to the downside, as mentioned, counted like this. So we then have a wave 1 to the downside, a 3-wave 2, very nice indeed, for then a move to the downside, where a wave 3 most commonly hits at least the 1.618 trend-based fib extension, taken from the high to the low of 1 to the high of wave 2, which has been tagged, which is very nice. Now a wave 3 can be extended like much further than the 1.618, but usually you want to see as a minimum the 1.618 hit, which is true in this scenario. Now if we then zoom in to this structure, as we just did with the more bullish scenario, but now for the bearish scenario, you want to count a 5-wave structure to the downside inside of this wave 3, because wave 3 is an impulse, and because 3 is an impulse as well as 1 and 5, you want to see 5-wave structures in the impulses. So let's then zoom in, go to the micro scenario, back to the 2-hour, and now look at basically the same scenario as the bullish one, where we are then looking for a wave 4, for then a 5 to the downside. But this fifth wave is not the end and not the beginning of then a bullish move to the upside, but the fifth wave over here is then only going to be the end of a bigger wave 3 in blue, for then a blue wave 4 and then a blue wave 5 for lower prices to come. In this scenario, the 382 and the 05 is the common target between 26.9 and 27.5k, and I put the invalidation over here at the 0.618. It's extremely rare, and also you don't really want to see candles close above the 0.5, so that's why my invalidation is over here, and one could expect a bit of a range on the lower time frames, because wave 2 was then very short, so wave 4 tends to be again longer and sideways. Now is this the low already of wave 3? That is yet to be seen, of course. Can this be the low and then a wave 4 and then a 5? Yes, absolutely. If we look at the confluences locally, then inside the resistance area, or at least the target area for a wave 4, we do have a monthly, and because price basically crashed through the monthly, offering no support, it is now a very important resistance area at 27.2k, for there may be a bit of a corrective structure, then a move to the downside, where we do have a daily naked point of control at 24,975 in case price does move to the downside. You can also see I have a golden pocket on my chart over here. And just based on some experience in the past, if you get a big crash to the downside, then what price tends to do is retrace to the golden pocket. If it finds support over here and maybe we get a bit of a bounce, something like this, bullish CVD divergences, maybe market structure change, the golden pocket is always a good area of support after a big crash, for then potentially a bit of a move to the upside. Of course, you want to see proof of support. We don't YOLO, FOMO and catch knives. You want to see proof of support, whatever that is for you, market structure changes, divergences, any indicators you're using, for then potentially a move to the upside for the end of wave 4 around that monthly inside of this target area would be very nice, for then a move to the downside for a wave 5. If we look at the CVD divergences, then we do have some bullish as well as bearish CVD divergences. So we had bearish ones over here. These already played out. The bearish ones over here did not yet play out, because that would be this low over here. So as you can see, price is hovering currently above this low. Did we actually hit the golden pocket? Yes, we did indeed with the low over here, so that one has at least been hit. We do have some bullish CVD divergences, higher low in price, lower low on the CVD. Has to be said that, of course, this low is a high volume low, so it lowers the probabilities for the bullish scenario. And we had some bearish CVD divergences throughout the retracement. So it's not ideal, but the probabilities are never zero. It's a probabilities game, and we do at least have some bullish CVD divergences, where then the target is going to be this high over here at 27K. Now, if we go to the probabilities, then if we zoom out, the probabilities are at the moment higher on the medium time frame for the bearish scenario, where we are still looking for a move to the downside towards this wave C target area between 22 and 23.5K. On the low time frame, also, the bearish scenario at the moment, higher probability from an Elliott Wave perspective. The 1.618 got tagged, which is a common target for a wave 3 and a rare target for a wave C. And on the micro, well, the micro between the bullish and the bearish scenario is basically the same, but because of the target areas for a wave 5, and just in general, the move to the downside, volume increasing while prices make lower lows, like, you know, on the micro as well, and low time frame and medium time frame, the higher probability at the moment is towards the downside. But on the micro, more locally, you eventually want to see a wave 4. It's going to be weekend. Weekend tends to be ranging structures, like on Saturday and Sunday. Of course, Friday night, you never know. But throughout the weekend, usually you get a bit of a range, which would work very nicely with a wave 4 to have a ranging weekend. And then next week we'll see what happens. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.